That sound means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we go through the markets a step at a time, technical analysis, news, context, kind of give you guys our insight as to what we're seeing, how we're reading it, and help you better run your daily routine. On today's show, we got a full panel here today. We've got Coach Mark and Coach Matt on the back end doing analysis as always. Coach Tyler Craig is joining us on a Tuesday to break down the markets. Also has a couple of trades that he's going to show us a little bit later, and we're going to discuss them. We're going to be looking at, from a top-down perspective all the way through the indexes, commodities. We'll look at some individual corporate news. Stimulus was passed, guys. Big news announcement last night from Congress. We'll look at the market reaction to it, as well as some interesting news out of Apple Computer and Peloton. Apple might be getting into the EV market here pretty quick, and we'll talk a little bit about that. Welcome out, everybody. If you're a veteran of our community, hashtag Team Tackle right in the chat. Let's come in. Let's get the energy fired up. Let's have a great hour here. And if you're brand new to our channel, we do this whenever the markets are live. We go live 12:30 p.m. Eastern Standard Time. Click that subscribe, click the bell, come back and join us. And as always, there's a 15-day trial link to our pro membership in the description of every one of our YouTube videos. So come and join us on the back end if you're looking for a trading community to learn from veteran coaches. Let's get down to business. Tyler, how you doing today, sir?
I'm good, Tim. I'm good. I just thought of a smart comment on Apple. I'll save it for later, though.
You save that one. Put that one in your back pocket, buddy. I like it. Matt, yeah. How you doing, sir?
Doing good, Tim. Excited to be here with the crew to break down some news in the market this week.
And as always, Marky, how you doing, sir?
It's A+ cash flow environment. Until that changes, I'm going to be doing just peachy.
Yeah. Let's start with the broad market here. Obviously, we had stimulus pass last night. Tyler, go down to an intraday chart, then we'll come back to the daily here in just a minute as we're reading this technicals. Matt, we're talking about this all morning, actually, kind of breaking this down, trying to wrap our head around the price action and what is happening. Obviously, this is a $900 billion bill, and it is the second largest of all time. The third largest, by the way, just that one in 2009 is a response to the financial crisis back in the Great Recession that President Obama and the Congress passed at that time was about $831 billion. So we're talking about the second largest bill of all time. There's also $1.4 trillion in funding for the government, putting the whole total up over $2 trillion, Matt. First of all, what's your read here, Matt, on the actual passage of the bill? What's your reaction?
Tim, I was actually just reading an article where Mark Zuckerberg offered U.S. regulators the opportunity for Facebook to create a competitor so that they could get around antitrust concerns. And I literally almost I was taking a drink and I about spit it up. Like I was laughing so hard. Facebook Zuckerberg offers to create competition. That is the greatest headline of all time. But regarding the stimulus bill, Tim, like we talked about yesterday as we detailed what's in that bill, PPP loans, $600 check, rental assistance, all of that jazz. It came in, they took the vote last night around 7. They passed the vote. There was some controversy around it. I mean, it was a big bill. I think people don't understand how the legal system works sometimes, but it was attached to a larger spending bill. And so there is some people criticizing this bill, but I think that's a little bit misunderstanding a little bit because it was tied to a larger spending bill. And so there's a lot of controversy around some of the things in the larger spending bill that is not attached directly to the stimulus bill. The stimulus bill in and of itself does not have any surprises in there. We were expecting $600. We got $600. We were expecting $300 in enhanced employment benefits. We got $300 in enhanced unemployment benefits. We were expecting PPP loans. $280 billion of PPP loans. We were expecting rental assistance, $25 billion to rental assistance. We were expecting airline assistance, $15 billion to the airlines. And so we were expecting a lot of what was in this bill. It was a fairly transparent process through the Gang of Eight, in my opinion. And so there's nothing today that should surprise anybody in that bill. And now, for anybody that has a hard time mixing political theater with what is happening in the market, remove any criticism of the bill that is tied to the larger spending issues, because that has nothing to do with the actual market itself. The only thing that has something to do with the market is the 900 billion spending plan. Now, there's a lot of analysis in the market today, and I warned people of this yesterday, that they're going to criticize the bill because of it lacks this, lacks that, lacks this. Ladies and gentlemen, it is a 900 billion spending, 900 billion stimulus, second largest in the history of the United States. And this isn't the last one. Democrats are already, I thought it was going to be a month, guys. Democrats are already talking about the next bill. This is not an ending point. This is, again, something that is going to be ongoing. And so, to me, there was nothing surprising in the 900 billion, because I do believe it was a fairly transparent process. We are now done with that. Now they got to go through the distribution of the checks. They got to go through the, getting the enhanced unemployment benefits out there, especially there's a lot of people in a lot of need right now coming around the holiday season. So, we hope that the IRS can get their act together and get some money out to some people for the holiday season, get some help for the people that need it. But like I've been saying for the last 6 weeks, Tim, I've felt like we were going to do, quote unquote, a skinny bill, right? We did. I thought we were going to see the continuation of more conversations toward more bills. We're already seeing that. Nothing should be surprising people today.
Mm-hmm. Tyler, market reaction's been muted here. What are you seeing in the technicals, from that perspective?
I mean, it's boring. It's boring. I feel like your reaction really wasn't last night. It was the night before, right? Because Sunday, what was today? Last night was Monday night. So yeah, so Sunday night, like over the weekend, if you were anticipating like a buy the rumor, sell the news type reaction where they finally get a deal done and markets sell off. I mean, if that was your narrative, you did see that a little bit on Sunday. Though, I don't know, I think the headlines blamed a little bit of it on the coronavirus strain in the UK, but whatever. I mean, in terms of the last 24 hours, you've seen nothing. I mean, the market's virtually unchanged. There's nothing to see here. The market has paused this week. We've had a really big run up. I don't think there's much to talk about from a technical analysis perspective. Things remain bullish.
Yeah, and I'm with you. And I got a question for you, Ty, on that. We've had quite the run up post-election. Like the market's been in a little bit of a celebration mood. Mm-hmm. But over the last couple of weeks, as we've been, getting closer and closer to this, the agreement on this stimulus deal, the market has lost some momentum here. And not so much from a theme perspective, but from a technical perspective, does that slowing momentum give you a little bit of caution coming into the holidays, or do you see the market in the last couple of weeks just taking a little bit of a breather, because it's kind of been a really tough year for a lot of people, and the market's been, it's been a fascinating year in the market. Mm-hmm. But guys, I don't think I'm only speaking my own book when I'm saying I'm a little tired of 2020.
Yeah,
I think a lot of people are looking at the last 2 weeks of the year and thinking vacation. But go ahead there, Tyler.
Well, so yeah, the S&P has slowed a little bit. What's interesting though is small caps haven't. I mean, I
love small caps here.
Small caps continue to be strong. You don't really have slowing momentum there. And the NASDAQ recently has broken out a little bit and started to show some strength. So yeah, if you're looking at the S&P, I mean, I think you could definitely argue a little bit of slowing momentum. And it's inevitable too. I mean, even though small caps are doing quite well, this trend line is so unsustainable. It's ridiculous. So
it's got to slow down. Yeah,
it does. And the other thing I think is just in terms of like cycles. I mean, if you put on a bunch of trades after the election, particularly option trades, a month has passed. You're probably at the point where you're taking profits on a lot of those anyways, particularly if they're cash flow trades. I don't mind reining in the horns a little bit around the holidays. It's just, there's a difference between taking some money off the table and going bearish. And I'm a fan of the former. I think the latter is crazy.
Well, and isn't that, as of right now, based on what we're seeing in the data, based on what we're seeing in volume, it does feel like this is more, hey, listen, it's been a good run post-election. It's been a crazy volatile year. let's take some off the table and let's go on vacation. There does seem a little bit more of that than, oh my goodness, the sky is falling, let's get out, right?
Well, and yesterday, I mean, yesterday was kind of nasty at the open, down 2%.
Yeah.
I feel like yesterday was the first time you had this gut check that it's like, okay, it's not free money every day. There is risk. And so I think yesterday was a wake-up call, just a reminder that, look, if you were panicking yesterday when the market opened down 1.5%, 2%, what's that tell you about how much exposure you have?
Yeah, and I said yesterday something very similar. Ty said, you know what, guys, I think more than anything today is just a gentle reminder that we're not out of the woods yet, that we still have some difficult things, and just a reminder to tighten everything up and get back more to systematic trading.
Yeah.
Mm-hmm. Yeah. But even with all of that in mind, I'm not going to stop taking individual trades here, guys. I mean, if there are setups, we're still taking them.
No, this is not one of those environments where you got to be very, very cautious. No. This is, you see a trade, you take the trade, you probably wait for confirmation.
Mm-hmm. Mark, as a cash flow trader, somebody who loves theta decay and kind of sleepy markets that are moving back and forth, you have to love this environment right now. What is your read on the market as well as stimulus conversation, Mark?
Well, I mean, the stimulus, I don't know. I'm waiting to go directional exposure when I see something that can get everyone excited, a theme that people are like, a new theme, something fresh, right? Something exciting, something like that. From what I primarily do, it has just been an amazing environment. Even when the markets aren't moving, many stocks, as you've alluded to, can still move. And there is just so many layers of support, whether you look at moving averages. I mean, there's another bounce off the 20 today, whether you look at whole numbers, whether you look at breakout levels, providing new support. And we don't have a bearish theme. This is something I've been talking about on our Sunday night weekend prep class for 5 weeks straight. We do not have a bearish theme. One will emerge maybe in 2022, maybe next month. You don't know. You have zero idea. But as long as you have technicals like we do, and as long as you don't have a real bearish theme, man, from a cash flow trader perspective, it's just really juicy out there right now.
Mm-hmm. Tyler, you had peaked at the Russell, and I would obviously put that as 1A. The NASDAQ, though, I would have it as number 2, right in front of the S&P, actually. Can you quickly just flash through the indexes? Tell me if you're seeing anything relative strength or weakness.
Yeah, I mean, as far as relative strength, small caps, I mean, yesterday was ridiculous. Yesterday could have been nasty. I mean, you could have had okay, we've rallied on stimulus anticipation or in anticipation of that. It's done. They've agreed on it. They'll vote on it tomorrow. Sunday night, future sell-off. We opened lower. We could have continued lower, and this could have been a multi-day retracement, but it didn't. Right. So small caps really went up from the get-go and never looked back. I think opening down 1.5%, 2% and closing unchanged on the day is very impressive. So it just proves that dip buyers are still there. They're still alive. They're still willing to play. And up another 1% today. It's like, look, from yesterday's low to now, these things are up like 3%. That's pretty impressive. So yes, you continue to see demand and strength for small caps, and it's very, very hard not to be bullish when you get a gift down open like that and bears just do nothing. They do nothing. So I think it's impossible not to be bullish on small caps. Tech is interesting. I mean, you could make the same argument though. Yesterday's candle on the Qs was fantastic. You came down, you tested the 20 MA. And look, you end with a nice hammer candle on heavy volume. It ran up and closed at the high of the day. Today's a little bit, boring, but look, it's going to get boring the next couple of days ahead of Christmas. So,
yeah,
volume's going to die down. That's to be expected.
Well, take a quick peek at XLK there, just to kind of go along with your technology analysis there.
Yeah,
you're looking at the actual sector as a breakout right now, like literally today. Now it's not strong, and you don't love the momentum, but a breakout is a breakout. And so you got to respect the strength of the last 2 days. I mean, you said it, Ty. Those dip mechanics, well, average yesterday, any gap down in the futures market should be gobbled up until that changes.
Yeah, and I think you just don't overthink it. I think that you put alerts at yesterday's low. You now have a new benchmark or a new threshold you can use. you take out yesterday's low and then we got problems. But until then, I mean, that's your new pivot low. So as long as we're above yesterday's low in any of these charts, you got to remain bullish.
Mm-hmm.
Agreed.
Mm-hmm. Yeah, I like to call on tech there as well. And, you know, the NASDAQ has had a lot of relative strength, but the Russell, like you mentioned, it's been number one there for a while. And it does have to slow down, Tyler. And you're famous for your approach to small caps. You believe in them. You've invested in them for a very long time. You built a system around trading off the rut and whatnot. I mean, do you start yourself just kind of slowing down, take a little profit? Do you roll stops? Do you do anything when you feel like things are overstretched like this, or you just make note of it?
Well, I think it depends on your time frame. I mean, if you bought, look, like if you're a shorter term trader and you bought something and it's up 30%, I mean, sure, like you'd be a fool if it went back down to where you bought it and you didn't do anything. But what's your time horizon? You know, if I want to own something for years and years, no, I don't do anything here.
Mm-hmm. Yeah.
Well, yeah. And I think it goes without saying that the Russell 2000 has to slow down. Increasing momentum doesn't constantly increase. It's going to decrease. The markets don't perform like that.
Yeah.
But it doesn't mean that the Russell 2000 won't still outperform the S&P or the Dow Jones. The Russell 2000 can still be a leader in that environment. So you got to love the momentum in the Russell 2000s. And even though I expect it to slow down, I still expect it to outperform the S&P right now.
Mm-hmm.
Well, and doesn't it also speak to like the value of diversification and owning different things? I mean, if you favor things when they're out of favor, they eventually, I shouldn't say that, but if you stick with something when it's out of favor, it eventually comes back into favor, and things that are in favor eventually go out of favor. And part of the reason why, when you look at a diversified basket, if one thing's working and the other thing's not, and then they switch places, just the sum of the parts, you know, is more often than the individual parts. And so that has just been reiterated and reinforced to me this year, where eventually things play catch up if they've underperformed for a certain period of time. And you just see that cycle play out again and again.
Especially in a hot market, Ty, because all money does is rotate from resistance to support. That's what it does in really, really hot markets. Technology, communications, discretionary get overextended. It rotates into the markets that have not been performing like that. That's what happens in hot markets. That's what we're continually seeing right now. That's why I think you still got to believe the market that the market's in price appreciation mode here.
Yeah. Yeah, I'm with both of you guys on that. Ty, let's flash through the commodities if we can next. Some of the conversations I want to have today are around individual companies. The Apple news, I think, is big. Peloton. I do want to talk Bitcoin here in a minute, kind of from an ancillary point off of the Ripple news that was very, very interesting. But give me a look at gold, crude, the dollar, and then we're going to finish on Bitcoin. But I'll stop you as needed. But let's start working through these if we can.
Yeah, I mean, gold, it seems like if you've been expecting gold to rip on these breakouts like it did back in June, July, you've kind of been a little disappointed. It's like, come on, man, you're taking out resistance levels. Let's get something going. But it's just a little more slow and steady. I mean, I like that it broke above the 50-day moving average a couple days ago. And today, you know, it's kind of flirting with breaking back below it, but you know, you're still above 20 MA. It's just sluggish right now, which is fine. I think it's not Bitcoin, it's gold.
Do you see anything different on this break of the 50-day moving average versus, say, a month ago when we broke that trend line? Because when we broke that trend line, I remember that day in the market, and I believe I said, it's go time. Because that is definitely something I would have said on gold. And so I kind of feel it's go time again.
Mm-hmm.
I kind of, and quite frankly, the dollar chart is really kind of the trigger for me on that one.
Mm-hmm.
You got an increase in support this time, unlike you did last time.
Right.
And so you're also fighting the 200-day moving average there. Do you see anything different this time versus last time? Because I'm certain there are people a little hesitant given the fact that we got fooled last time on that buying signal on gold.
Yeah. I don't know that I see anything major different. I mean, yes, you did have a higher pivot low precede the breakout. And yeah, the dollar's weak. I think you just have to look at the weekly. I don't know that I see too much different. Other than we're now back then you broke above the 20 weekly.
Yeah.
Now you haven't. So maybe on the weekly you could say you need a little more evidence.
I like a close above 1900.
Yeah, you might want a little more oomph on that.
Yeah.
But
Okay.
I don't know. I mean,
you also don't try to, assassin pinpoint gold.
Yeah, that's the thing is it's like, well, look, if you're going to buy like a 1 week call option, I mean, good luck,
Right.
because you're not giving yourself any time. But yeah, I think it's okay. Like I wouldn't be buying this dip here after a sluggish breakout attempt. So
Yeah.
the pattern's kind of whatever for me, to be honest.
So you need some time.
Yeah, it's not.
Yeah.
It doesn't scream buy me right now, kind of like it did last time. I think it's less potent a breakout attempt than the last one, I would say.
All right, a close above 19 with some volume, though. You're gonna get that. That's a little more sexy for you.
Yeah, I'm already trying to make my money back from the last failed attempt. So
okay.
I mean, I want the thing to go up.
That'll get you there.
Yes.
That'll get you there. Let's get Tyler break even, guys.
That's right, gentlemen.
I'm excited.
Yeah. I like this pattern here, and the fact that it's grindy is, hey, fine with me. I don't need gold to go crazy.
Yeah, just build a strategy. Don't go buy a ton of out of the money long calls unless you're, it's a lotto ticket. So I think you just build something that's more of a slow, steady position trade type move, and that's the way I think you play it.
I found my new favorite phrase Tyler uses to describe a beautiful cash flow environment. When he says the chart's I'm like, oh, that's good cash flow. Whenever Tyler goes, that's a good cash flow environment.
Yeah. Crude oil next, if we can. Let's see if we get an out of Tyler on this one as we peek at it. I think maybe a little bit actually bullish here, Tyler. I don't know what you're seeing. A couple of interesting candles though at the top of that little trend. What's your read on the chart here?
I mean, so this is another, I guess, example of the market being a little bit weaker today, where yesterday you saw more selling than we've seen in a long time. Biggest red bar from top to bottom in really this entire move, right? And so, but it's impressive that 20 MA held. So the initial reaction was we buy the dip. I would get a little bit concerned if this broke the 20 MA. I mean, that would be a little bit bigger retracement than we've seen the entire way up. So I would downgrade my bullish bias a little bit if we broke the 20. If we stay above that, I mean, yeah, I think you got to stick with the trend. It's just due. I mean, this thing went from 34 to 49. That's a big move. And so you're going to get a bigger correction somewhere in there when a stock goes up. Mm-hmm. Really, that's almost a 50% move, right? So it's like, yeah, I mean, you can't keep growing at that pace. You're going to get a bigger retracement one of these days. So in the short run, I like it as long as it's above the 20. It breaks that. And then I think it takes some time before I like bullish swing trades.
Mm-hmm. The dollar, then Bitcoin next, if we can. Dollar looks like a little bear retracement. Obviously, when we're talking about announcing the second largest fiscal stimulus package of all time, Matt, it adds to the conversation we've been having all year long.
Skinny bill, bro. Dollars go up.
Is it skinny bill?
I was just going to say that, but Tim, it's a skinny bill. It's a skinny bill.
Skinny bill, bro.
Matt beat me to it. I couldn't get off mute fast enough.
Yeah.
Oh, the logic. I'm trying.
The benefit of a hot mic all the time there, Cody.
Oh, it is a benefit there. I did like the way Patrick O'Hare said it in the briefing this morning. He said, so basically, even though it's a skinny bill, it's still a big deal. And I was like, oh, that's clever. That's clever.
It represents like 4.3% of our GDP. It's a massive deal.
It's a big deal.
Anybody who's saying this is a small deal, you shouldn't listen to them. It literally represents 4.3% of the largest GDP number in the history of the known universe. It's a massive bill.
So are we buying dollars here?
No. No. Hey, we need to play that game. What asset class is Matt willing to buy instead of dollars?
Oh, goodness. I see a bear.
Tulips? Let's start with tulips.
Yeah.
Hey, at least they make the wife happy.
Yeah,
that is true. Tulips are my wife's favorite flower there.
Hey, I think most flowers make the wife happy, don't they? I mean,
I'd rather buy Ripple in front of an SEC lawsuit than you do me. Are you kidding me?
Tyler, little bear flag here. I don't see any reason not to just stay bearish on this instrument. Obviously, the fundamentals, the backdrop, the conversation, the themes, and the technicals. Anything else you want to add to this one here?
No, too early to buy. Yeah, it's bear retracement.
Yep. All right. Bitcoin last. And Matt, interesting kind of news this morning out of Ripple. I think we're still trying to process it and understand it.
Yep.
But I think it's probably appropriate to kind of just give the news and describe what's happening out there. Explain what you read this morning. And we had a long conversation this morning.
Listen,
Fascinating
are
news.
you sure you want me to explain it? Because we might be here for about 45 minutes because I got a lot of questions.
No, well, listen, no, this is a really, for someone who is on the bandwagon, but has concerns.
This is a
I'm really, and I'm sure that,
fascinating conversation.
and there are a lot of people like me, you know, and so I'm very curious on people's take on this.
Well, here's what I know. I know that regulators from the SEC are coming in and getting serious about potentially regulating Ripple, which is a currency in the cryptocurrency space, one of the more popular ones. In fact, I believe by market cap, I think it's in the top 5. I'd have to go look at that specifically, Matt, but I know it's up there near Ethereum. It bounced back and forth between Litecoin there for a while.
And a currency. How can I have a market cap if it's a currency?
It is a company and a
Others have market
currency
caps.
is what they're claiming. Actually, the SEC, that's part of the point
Yeah,
here,
that's
Cody,
what I bring up.
is the SEC is saying maybe you are not a currency, Matt, and they're bringing suit against the company saying that you issued securities when you sold
Yep.
your cryptocurrencies in the past, and those should have been regulated by the securities market, which is why the SEC is getting involved here.
This is the big one, boys. I'm not kidding. This is a big, big, big deal because we're talking about the categorization of a new asset, however you want to categorize it. Do you categorize that new asset as a currency, a commodity, or a security? And why that is so fundamentally important is because if it's categorized as a currency, they can, Ripple and other companies like Ripple can bypass SEC regulations because currencies are not regulated by the SEC. Now, traditionally, there are 5 categorizations on categorizing a currency. Now, regarding the crypto space, there's only 3 that are relevant. And so I want to ask Mark this. Mark, you're interested. Let me ask you this, because you weren't here for the conversation earlier. To be considered a currency, and again, why this is important, guys, if Ripple is considered a security, what do you think is going to happen? That company might go out of business if they don't make a deal with the SEC, because they've been selling securities for years and years and years without regulations. Think about if Apple Securities started selling Apple bonds without SEC guidelines.
Mm-hmm.
They'd be done. I don't care how big the company is. Also, we all know that the governments around the United States, around the world, not just the United States, want to get their greedy little fingers into this market, right? From a regulatory perspective. China's doing it, Europe's doing it, Russia's doing it. Obviously, the US is doing it as well. Now, the difficult nature of this is we don't know specifically how to categorize cryptos. We don't know how to categorize them as a currency, as a commodity, or as a security. Now, if they are categorized as a currency, which every crypto dreams of being categorized as, they do not have very many regulations in what they're doing. They can just continue to do. If they are categorized as a commodity or and specifically as a security, it's going to be a war. It's not going to be a battle, guys. It's going to be a bloody, bloody, bloody war because, again, regulatory measures. Now, every crypto in the known universe wants to be categorized which way? Commodity, currency, or security?
Currency, right?
Obviously currency. Obviously currency. To be considered a currency, again, there's 5 criteria. We're going to talk about 3. Number 1, you have to be a medium of exchange. Okay, which means what? What does that mean? You have to be a medium of exchange. What does that mean?
Well, you got to be able to use that currency to buy and sell transactions.
You got to buy stuff.
Yeah,
Buy stuff and gotta be a source of
stuff.
value. You have to
I
be
got to exchange my Ripple for your Apple iPod or your, I can't believe I said iPod.
or
Wow,
a pizza or coffee
or a pizza
car.
or a coffee or a car or whatever the case might be, right?
Mm-hmm.
The consumer adoption type thing. Now, as of right now, are these cryptos used as a medium of exchange?
Not for any practical purpose.
Not for any practical purpose, because think about the speed. how long does it take you to use Bitcoin, Ripple, Litecoin, or Ethereum, which people don't do, but how long does it take you to use that to purchase something versus, say, swiping my American Express card or using my debit card or giving cash to the vendor at the local, gas station or whatever the case might be. And so it's very difficult to consider this a medium of exchange when consumer society does not utilize this technology as a medium of exchange. Governments, central banks, businesses do not use this as a medium of exchange. One, because it's not efficient. Okay. Number two, to be considered a currency, you need to be a storage of value. You got parks of money there. Now, the storage of value goes to the volatile nature of the marketplace. Storage of values do not, and I've made this argument many times about the crypto space, but storage of value, for example, if you saw gold drive 10%, what would everybody do?
If you saw gold run 10%,
10%.
I would applaud it, because I
roll my
hold.
call options up.
And manage my investment maybe, but yeah.
You would also think that's not a normal movement.
No,
Well,
not
yeah,
a day.
It's very
No.
Right.
Oh,
we
one
would
day?
all be one day.
Oh, you're talking one
yeah,
day.
well,
No, I'm
one
not
day's
talking
volatile.
over 6 months, guys.
Yeah.
I
I'm
would
talking
think that
one
the world
day.
was.
I was just going to say, I would think
The world's
apocalypse is
ending.
coming. The
Gold
world
is-
is
If I
ending
woke
if
up and
gold
saw
runs.
gold up 10%, I'd
Who
be
dropped
like,
a nuke? Like
Yeah.
literally.
who dropped a nuke?
Who dropped a nuke? Okay. So we can speculate on that after the halftime show. Now, okay, so you would think that. But if any crypto drove 10% in a day, what would you think?
Another day.
Okay.
It's another day.
Yeah.
Okay. And also, would anybody be surprised if any cryptocurrency drove 70% downwards in literally months?
No.
No. Okay. What would the world do if the dollar drove down 70% in months?
You'd have revolution potential.
You would have literal revolution around the world. Okay, so it's very difficult to consider it as storage of value because of the volatile nature of this marketplace. Now, the naysayer to my argument would say, well, yeah, but man, the dollar's been around for 100 years and Bitcoin's around for 10 years. You're right. Bitcoin and other cryptos can evolve throughout history and be adopted by consumers so that it does have a medium of exchange and a storage of value, but we're early in that process. Number three, it is a fixed unit of an account. It's a fixed unit of account. When you're looking at these three categorizations, at least for me, it's very difficult to make the argument that cryptos are a medium of exchange that has a storage of value that is a fixed unit of account. Ripple can claim it is whatever it wants to do. I can claim I'm Dan Marino, but that doesn't mean I can go, I'm a Hall of Fame quarterback. Anybody can say what they want to say. They can be whoever they want to be. That's fine. It doesn't mean society is going to adopt you as that. And as of right now, there is nothing but question mark after question mark after question mark regarding these three very important questions. Are they a medium of exchange? As of right now, I believe the answer is no. Are they a storage of value? I believe as of right now, the answer is no. Now, specifically Bitcoin, not other cryptos like Ripple, Bitcoin loves making the argument of storage of value. Again, storage of values don't drop 70% 3 times in short history of their life cycle. Are they a fixed unit of account? These are open questions. And I would be very, very nervous if I was the CEO of Ripple. I get the argument they're making, but guys, this is a 10-year conversation happening that people are finally waking up to. Mm-hmm. How do you properly categorize from a trader perspective? We just hypothetically talk about the categorization of currencies versus commodities versus securities. It's kind of like second nature to us. But from a legality regulatory measure perspective, this question is very, very, very important. I can just tell you my belief is cryptos are a speculative asset class that trades more like securities than they do commodities or currencies. I think it's going to be very difficult for Ripple to make the legal argument that they are a currency. This is that legal battle that a lot of the people in the crypto space have been anticipating and a little scared of, because the government's going to come and they're going to try to regulate. Now, whether they can or not is a different beast. Now, Bitcoin, Tim, you know this. Bitcoin's a little bit different, right? Because Bitcoin isn't a company, guys. Ripple is a company. It has a CEO.
Right. Yep.
Bitcoin is not. And so Bitcoin is a little bit different there. And that's one of the reasons why when we're talking crypto, we don't talk a lot about Ripple or Litecoin or Ethereum or some of these other areas of the crypto space, because there's much more concerns there than there is here in this space, this space specifically. I'm not as concerned about Bitcoin as I am the other cryptos, although Bitcoin will get hit. I personally have the same conversation on Bitcoin, but it just doesn't have it. Like, how are you going to sue Bitcoin?
Yeah. There's no person. I mean, unless they can
No
find
person.
the
They're not going
Nakamoto.
to find Satoshi. I mean, they're not. He's not even real. So, I mean, they're not finding the dude.
Yeah.
So like, there's no company headquarters. There's no CEO. There's none of that. There is on Ripple. There is on these other crypto spaces. So it's going to be fascinating theater. What I'm most interested in, guys, is the categorization of this new technology. I am fascinated by that conversation. I think it's going to be an ongoing conversation over the next 2 years.
Yeah, and that's one thing I would tell Brad Garlinghouse, who is the CEO of Ripple. You might claim, well, the Justice Department already said we were a currency in 2015. Guess what? The world is still having this conversation around cryptocurrencies in general.
Fairy. That doesn't mean society's going to see me that way.
Look at that soundbite right now, Cody.
That's right.
I'm a precious little fairy.
I'm a precious little fairy today.
This is a fascinating one. Honestly, it really is a fascinating one. And the implications here for Bitcoin are big if things do develop. Now, it's not going to develop in the short term, Matt. Obviously, these legal questions take time, and they're going to have all kinds of different time to process that. But I think it's one, anybody who trades or invests in cryptocurrency or has an interest around them, we're going to be paying attention to this kind of conversation.
This entire thing, though, makes you just appreciate the genius of Bitcoin, though.
Yeah,
it really does. How do you sue it? How do you regulate it? Government's been trying for 10 years.
Non-centralized, deregulated.
Very difficult.
Yeah.
You got and as somebody who appreciates, anti-central bank type stuff, I kind of like it.
For sure. All right. We'll keep tracking this. We'll keep watching the price action and let you guys know as things develop. Let's move on to stocks if we can here next. By the way, if you're out there watching our halftime report here today, it is Tuesday, 12/22. Appreciate you guys seeing the conversation in the chat. Love it as always. Hashtag Team Tackle is our official hashtag here on the halftime report at Tackle Trading, because we are a community of traders and, we love that. Let's start talking companies here, guys. And we got to start with Apple Computer. This is a fascinating one in my personal opinion. Nice little price reaction today. We'll get Tyler's technical read. Apple announced Project Titan, which when Matt told me the name Project Titan, I instantly thought that is a really cool name. Very smart name for an EV movement, for big type of thing, Matt, and all that kind of stuff. Go ahead and go ahead.
I kind of felt that was Tim Cook's way of saying, "Hey, Elon, I'm going in one of your Falcon SpaceX rockets to Mars with you." I loved it. I loved the name.
And basically, they've got breakthrough battery technology that they're hinting at. They want to get an EV car out there by 2024. We don't know all of the details of what the production side will be, if they're going to go into some kind of partnership with somebody. Those little details they did not share, but they did talk about these plans, Matt, for 2024. And here we are. That's just 3 years from now. This is a hot market, no question about it. Obviously, implications on Tesla here were the first thing where my head went as well. But it's just a reminder that Apple eventually is going to dominate like everything that they choose to. They can get into almost any market.
My head is Apple really wants that ESG money.
Yeah, that's a good call as well. Matt, what's your read on this situation? Obviously, nice price reaction, but what about the news itself?
At some point, Apple and these big conglomerates are just going to have their greedy little fingers in literally absolutely everything. But with the momentum in the EV market and what we've seen in ESG in general over the last few years, it makes a whole lot of sense for Apple to get into that market. And obviously the EV market is dominated by Tesla, and I know Tesla's down on the day on this news. I don't think this impacts Tesla that much, quite frankly. I think it's more just of a positive for Apple moving forward, and I think this space is going to be very, very large in the future, which means there's going to have a lot of competition in there, and it makes sense for Apple to get involved.
Yeah, actually, give me Tesla. I think your read on that is perfect because even one of their analysts came out this morning, Matt. It was down a little bit on the news, but it's still holding the moving average. One of the analysts came out, I believe, he says we believe in 5 years Tesla will still hold around 1/3 of the global EV market share, leaving 2/3 of the market up for grabs. The bigger impact of an Apple car will be on traditional car makers. We don't think it affects Tesla. So there is some questions around the impact on Tesla, whether Apple gets into that market or not.
Yeah, I think 20 years from now, when you're writing the story of the EV movement versus the traditional, car manufacturer, I don't think it's like, oh my goodness, Tesla really struggled because Apple and Google and these companies got involved. I think it's the companies that failed to get involved in that were going to be the ones that struggle. And whether Tesla owns 1/3 of the EV market share in 5 years or owns a quarter, or whatever the case, I have no clue, and I'm willing to bet that analyst has zero clue as well. That feels like just completely made up numbers. But I do know that this space is going to be significantly big enough to withstand multiple competitors to make a tremendous amount of money in it. I'll tell you, I think the market's celebrating Apple getting into it. Tesla being down, I just think there's a little bit of a knee-jerk reaction, but overall, I don't think Tesla's that concerned about Apple getting involved.
And so back on Apple here for a minute, Tyler, I mean, what are you seeing in the chart?
Let me ask you before you go to the chart, regarding for Mark and Tim, do you guys feel like Apple's announcement is a negative to Tesla, or do you feel like Apple's announcement is more a negative to the traditional Toyota, Ford, GM?
I'll let Mark go first. I have an opinion on that, but go ahead, Mark.
Listen, Tesla is going to, I see these EV companies as car companies, and that is the reason I don't chase high prices on these in any shape or form at these valuation things. There's going to be a ton of competition in 20 years. I mean, the whole road might be EVs, and I'm not even saying that like hyperbolic. I mean, this movement is happening. There's no doubt about that. And in 20 years, these are going to be car companies. Are people going to be excited about them in 10, 15, 20 years when they're just car companies? That's the crazy thing. I don't see some transformative technology. I see people. If you're a legacy car company and you're not on board with this, you're in trouble. I don't want anything to do with your stock.
I disagree with that. I don't think these are car companies. I think these are technology infrastructure companies, and I think Singapore would agree with me.
Well, I mean, what do they make? They make cars, and they're going to be increasingly competitive.
That's the technology from a battery perspective, Mark, from an infrastructure perspective. These companies are far more battery companies than they are car companies.
And then they're going to have the struggles that car companies have in a very highly competitive market where lots of units are churned out. It's just, I've just never been on board. So.
If you do see Tesla as a car company, you should not invest in Tesla. You should stay away from that, and that's what you do. And I completely understand that. And the categorization, there is some subjective nature to that, but I do not see Tesla as a car company. I know they sell a car, but I see them more as a technology infrastructure company.
Yeah, and back to the original question, I mean, what impact does Apple getting into the business have on Tesla? In my personal opinion, I don't think it has an impact. I think the short-term reaction is that one-day news headline, okay, well, what does this mean for Tesla? People click the sell button. Tesla's already had a huge run. I mean, they just got included in the S&P 500 yesterday. Tesla will beat to its own independent storyline. We know that with Tesla, no question about it. And there are wide varying opinions on, what to do with Tesla. It's one of the hottest companies in the market for a reason, though, obviously, and it's had a huge year. I think Tesla can absolutely trend on its own, even if Apple's in the business. I mean, it's not like Apple competing is going to hurt Tesla's narrative. It's only going to help Tesla's narrative. You got more companies that want to do what Tesla's doing, is getting involved in this new movement and this new thing that's happening and really been blasting off.
This movement is a trillion upon trillion upon trillion dollar movement. It's not a small market. there's enough competition there for many players.
Yeah, I agree. Ty, give me a read on the chart. What are you seeing there? A little gap out.
What I like, what I like about the chart is Apple showed you bullish indications before today. Sometimes it's annoying when news comes out like this, and it's like, well, you had to own this yesterday to have really got the bulk of today's gains. That's tough if you gap out of a crappy bearish chart. But Apple's been showing strength for a couple of months, maybe 6 weeks. But look, I mean, Tim, you had a breakout right here on December 15th, took out resistance, made a new 3-month high. And then look at yesterday. Yesterday, again, a good example of how some of these leading areas and strong areas remain strong. They bought the dip in Apple. Old resistance became new support, whereas the NASDAQ closed down a touch on the day, maybe unchanged. Apple closed well into the green yesterday. So I think you had to tell ahead of this. And today, another breakout. And this, outside of, I believe, September 1st was the only other day that has closed this high. So if we close here, this is the second highest daily close on record for Apple. I think it goes up and tests the high on 138. I mean, that's the logical target. And I'm impressed. I mean, this was a nice breakout move. And for anybody who's had bullish stuff on Apple, you're pretty happy today.
Got to be happy if you are already long, obviously. I don't think there's a new entry necessarily on this unless you're playing it bar by bar. But I don't know, Tyler. I mean, is there a new entry today?
I mean, I wouldn't, but I'm already in. So talking my book here. But look, if it's a position trade, Tim, I mean, you look at the weekly chart. I guess my concern is, and this is what I would tell
last week, right? The trade.
Yeah, this is what I tell a trader. I'd say, well, if you like it now, why didn't you like it a week ago? Like what is it today that you like that you didn't like a week ago? I just think as a trader, you want to get to the point where you're getting in on the optimal time every time. I don't want to have a lot of trades where I'm 2 or 3 days late, and I feel like I'm a little bit late on this.
I agree. And I do want to get to one of your trades here today in just a few minutes. I do have one last stock item I wanted to go through, and then we're going to have Tyler build us a trade in the Coach's Corner segment. But Peloton, one of the hottest companies from a price performance perspective in 2020, it's up big here today. It's up almost 400% year to date, by the way, with so much of what's been happening out there. They actually are they manufacture of the exercise equipment. This company name was Precor, didn't know who they were, but they're paying $420 million on an acquisition news. Wall Street is loving this. They're citing increased efficiency and all that kind of stuff. The stock has just been a juggernaut. Let's start with you, Tyler. I mean, how do you even unpack this here? We've been up 8-9 bars in a row. It's up 410% year to date. It's gone crazy. What do you do with a stock that's already been running and then gaps out again on news?
If you're not in, you wait. I mean, there's nothing to be done here. So if you're looking for a new trade from a risk reward perspective, you have to exercise caution. It's just not a good entry. So Tim, you wait, and maybe it pulls back and fills the gap. Maybe it pauses a few days, but I mean, this thing's in the stratosphere. So this is a no touch for me.
Yeah, me too. All right, guys. Tyler, one thing we're going to do here today, we're going to go into our Coach's Corner segment where we have one of the coaches that are here on the show, break a trade down step by step by step. And the great Tyler Craig is here, options and directional trader extraordinaire. I have no idea what you're going to build, Tyler, but I'm very excited about it. Go ahead, Tyler. You're up, my friend.
Okay, so this is maybe not.
Right, hold on.
Maddie?
Hold on.
I have a speculation.
Hold
I
on,
don't think
hold
Tim's
on.
gonna like it.
Tim, Tyler has a job to do here, and you did not lay that out.
Oh, yeah, that's right.
Tyler's
Explain
job. Tyler's job in the Coach's Corner is to try to convince Cody, myself, you, and Mark to take the trade. And then we will either agree or disagree with the analysis.
I love it. So Tyler, you are going to make your argument. We are going to judge your trade, directly, I am sure.
Which, Tyler, that's what we love doing, is judging.
Oh, yeah. Well, I will lead with an arrogant statement. if you don't like this trade, it says more about you than it says anything about me. I'm just going to put that out there.
Standard.
Okay?
I love setting the standard there.
All right.
Oh my God! You just said 3 Justice brothers. You told them that it says more. And all 3 just said, "Well, we'll see about that."
All 3 started hating on the trade.
Yeah, you put that was not the right sales pitch to the audience here.
You know what though? I want to make it entertaining, and I stand by that. I stand by that.
I like it. I like the confidence, Ty. Bring it,
Okay. All right. So look, I'm not going to do like a classic high base breakout, a little bull retracement. Software stocks have been just eating the world. IGV is the a software ETF. So we know software is hot, and you very rarely get the opportunity to buy a leader in a leading industry at a discount. And I don't want to bottom fish unless the chart looks good. So I was scanning while y'all were talking crypto, and I came across CRM perking up a little bit here, right? We know Salesforce is one of the best names in this space. You take a look at the weekly chart, you've got a nice longer term uptrend, pulled back a little bit after earnings. I think that is temporary. I think eventually the earnings come back, or at least enough where the market likes it. So I've been looking for a reason to buy the dip. And I think today is the first reason you've had since this thing gapped lower on earnings. So you take a look at the daily, here's the down gap on earnings. And since then, we actually consider this for a bear trade because it had a little low base, but it did not break support. Essentially, it filled the earnings gap from 2 quarters ago, and that gap fill became support. Okay, so I've got a pretty good confirmation that we're seeing support come into play here. But if you want more evidence, you wait for buyers to return and jam the thing above resistance. Today is the first candle taking out a prior pivot high. This is the first time we've essentially broken a pivot high since like September. So I got a change in character on a stock I wanted to buy on a dip anyways. It's tested support multiple times. You're breaking resistance today. I understand that there are potential resistance levels, but there are always potential overhead resistance levels when you're going to buy a longer term pullback like this. So pattern wise, that's my case for fishing for a bottom here in CRM. If we were talking about this yesterday, we'd have said you got to have some kind of trigger. I think today's your trigger, taking out that prior pivot high. In a second, I'll tell you the 2 different ways I would trade it on the option side. But y'all got any questions on the technical setup?
On the technical side, very quickly, you got to like the constructive nature of the support bounce that you had, a little bit of a double bottom. You know, it had that big red candle on the 9th of December coming into that support level at 220. I mean, and then it just stuck to landing, and you got to be impressed by that. Right, you got to be impressed by that. Had all the momentum to the downside, had a negative reaction to earnings, tested underneath 220, tested it multiple times, had momentum coming into that 220, and then 4 or 5 days straight of consolidation. And really, you got to like the defensive nature on that. Look at that 9 EMA now crossing up over, getting close to that 20 EMA. You can start to see momentum coming into that. And I like that 230 channel on the breakout. Not only is that feeling some gap analysis, but you got a previous pivot there on 1030 as well as 11.2. You have that pivot there, 2-point pivot when the market was a little bit overextended in that neutrality. It pivoted there. If you can close above 230 and you can get above that and you can close above that 20-day moving average, I think you got to call that confirmation on that reversal pivot. My point is, technically, I do agree with you so far. I'm on board so far, Ty.
I thought the big red candle and then the gap down on earnings. The big red candle was the announcement of purchasing Slack, and then earnings was the details behind them purchasing Slack. So I don't think they missed on earnings. I think it was just the nature of acquisitions.
They didn't miss on earnings, but the market went down.
It's the nature of acquisitions where I think that they did a good investment by purchasing Slack, and from that point, plus the technicals, I so far I'm in.
I'm open. I'm open to it. Here.
I will tell you, I am not on the call side, like straight up call option though.
No, I want to
think
hear how
you
you'll
gotta
trade
have
it.
something a little bit of mitigating the risk,
Mhm.
but I am interested in the option.
Yeah, I can see the bullish nature, but how?
All right,
It's a
so
classic, it's a classic bottoming pattern that I trade all the time. Right now, I'd like it to be lower on the chart, but that's the OX case. But this pattern, consolidation, bears have 4 or 5 chances to send it lower, form support, start to clear moving average, form. This is a classic bottoming pattern for me.
Okay,
So
we're on board so far, Ty.
Mhm.
All right, so in building the option trade, I got a couple things to consider. One variable that I use, which, spoiler alert, that's what the next Trading Justice newsletter is going to be about, is we're going to talk about how to pick an option strategy, the definitive guide to strategy selection. So getting a little taste of that today. When I look at the price of options, I like to use implied volatility as a quick back of the envelope signal as to whether they're cheap or expensive. This one is not particularly expensive, and it's not especially cheap. It's kind of in the middle of the road here. So I'm going to say we could go either way on this. I think if you want to go higher probability, you can sell some out of the money put spreads. I'll give you the one that I would do here in just a second. But if you want a longer term recovery play on this, I think you can go a couple months out, buy some bull call spreads, get you a nice little risk reward trade that way as well. So I'm anchoring on the chart here under, 215, 210. If I can sell put spreads down here, I like it. Might even be able to do Jan, which is only really 3 weeks out, but let's see. So I'm going to go out. I'm going to sell, can I do 215? I might have to go to February. 215, 210 credit spread. I'm under support. So 215 would be my stop. I'm getting 87 cents, 87 on 413. And your 21% return for about 3 weeks of time. If you want to bet this doesn't take out the low here, get you a 23% return to bet it stays above 215 for the next 3 weeks.
So give me the numbers.
Hey, Ty, can you go back to the option chain real quick?
Yeah.
Yep.
What were your deltas on that? Can you?
215 is a 20 delta.
20 delta.
This is a 20 delta bull put spread. Selling the 215, buying the 210, just a simple $5 wide. So I got about an 80% probability of profit, and I'm making 80.
Very quick point of clarification. You're working in January, right? 24 days?
Jan monthly, yeah, 24 days out. Got a 21% return.
I think Matt and I are both doing the same thing, by the way. We're running our numbers on our spreadsheet.
We're running our numbers.
Yeah, that's right. Give me the chart if you can. And let's see here. What's the ATR on this thing?
ATR is 446.
So your two proposals are either bull call spread or bull put spread?
Yes.
Okay.
I'll get to the bull call here in a second.
Ty,
but
I feel like,
I like the support level you're selling under in the short term.
Matty, did your mic move on you a little bit?
It might have. Can you hear me now?
Much better. Yep.
Yeah.
Okay. Sorry about that, boys. I like the support level you're selling under. That is a short-term support level, obviously. Do you have concern about the probability of touch here? The probability of touch is 48%. I know the probability of expiration being right around 78%, 79%, but that's still a fairly substantial management decision you might have here.
Mm-hmm.
And now I like your technical edge, and the option probability does not take that into account here. I just don't know if you're selling deep enough here.
If I want to sell deep enough, then I got to go out to Feb. So the issue, the reason that's coming up is we're about that 3 week time frame. If we were 5 weeks out, we'd be fine. You start to get 3 weeks to the front month and selling a high probability credit spread. If the vol's not high enough,
you're trying to take advantage of the short-term technical pricing range and saying, okay, I have a technical edge on the short term. I'm taking advantage of that where the option probability is not.
Correct.
Okay.
Yeah. So anytime you sell a 20 delta naked put or credit spread, your probability of touch is always, 45%.
Yeah,
right.
Well, and the reason I said it was 48%, that's a little higher than it normally is. and it's probably due to some of the volatile nature of CRM and
Mm-hmm.
ATR distances. I didn't get to fill out the entire spreadsheet there. I like the edge. I'm just a little concerned on that, but you're getting 21% return on that. You can't complain too much. On the bull call side here, Ty, can you give me those? Have you walked through that yet?
Nope, not yet.
Let's do that one.
What was the credit on the put first? 85?
85.
85,
Well, actually,
87.
no, hang on. In my defense, it was 87. It was 87
It was
3 minutes
87.
ago.
It was
But y'all are
87.
hemming and hawing so much. Now it's 85.
Yeah,
Right,
traders
all right.
take action. All right. Okay. So I like it. I don't love it. I like it. I
Okay.
don't love it. Especially, let's say it does violate 220. I mean, at 205, you have just such a massive support level. Just
Sure.
such a massive support level right there under that 200-day moving average. I love your technical edge there. I do think there may be maybe we go out a little bit more time frame, or maybe we sell a lesser delta, see if we can get underneath that 205 level, or even at 205 by 200. But again, that's just nitpicking. Let's hear the bull call side of it.
Mm-hmm.
The bull call, I want to go out a little bit in time because, I want to give this time to make a recovery. And I do acknowledge there's a couple of overhead resistance levels. So again, I'd rather it hit my target sooner and wish I bought less time than do a 3-week bull call and wish I bought more time. Right. So I'd go out to February on this. You're about 60 days out. And if you want to have a nice little risk reward on a bull call, I like buying maybe the first strike out of the money and selling maybe the second or third strike out. So, I think ultimately 250, 260 is not an unrealistic target over a couple of months. In fact, your stretch goals maybe 270 if this thing fully recovers. But I don't think I need to go that crazy. So I think I could just buy the 240 call and sell the 250, pay about $3 for a $10 spread, can make almost $7. So, I got a bull call here where I'm risking 320 to make 680. I can make a 200% return if we get above 250 in 2 months, which I think is totally doable.
Marky, Judge.
I already placed my trade. I took the 215, 210. I got sold.
You like the bull put side of it, Mark?
I like the January bull put. This is a classic bottoming pattern that I sell bull puts on all the time. Tyler, you had me at hello. So it was a really easy sell for me because I love this pattern. Now, I do think, the probability of touch is negated, and there's no way to mathematically by the support level on the floor. Obviously, the market has to turn. I don't think, unless the market turns itself, I think this trade is good. I got sold easy on this one, so I did the 215, 210.
See, and I'm not on the bull put side here.
I'm not either.
I think the bull put side is too close in my personal opinion.
I think you're taking too much risk and you have too much management decisions.
I like the bull call setup out of the two. And I actually like the technical setup here. I think there's definitely an opportunity from a chart perspective. Tyler, when you brought this chart up, I would have almost guaranteed you were going to show me a diagonal call spread because of the low implied volatility that you identified early in the spread. And this is the great thing about option trading, right? You can match a strategy to what you think you're seeing.
Yeah.
The bull put is qualified. I ran the numbers on my side. We have a thing called tackle theta research. We're not going to go too far into it right now, but the ROI numbers look good. I'm a little bit concerned about the cushion to the to the strike at 215. Just even visually here, if support fails, that probably would whipsaw in the money real quick, and you'd have a management decision that could be pretty tough pretty quick. So in my opinion, I would go with the call side. I think it's a better setup.
Yeah, I would go with the call side too, Tim. I know that short-term support at 220 is good, but I like it from a directional perspective. I don't think it's strong enough to take on that risk on probability of touch, especially if it violates 220. You just got major support underneath 205. If you can get underneath 205, take a little bit less risk. I just think the 215 by 210 is too aggressive here, especially with where volatility is. This is the lowest point volatility has been literally since July. And so, yeah, you're getting 85 cents on the credit, and that's decent. But again, you got a 48% probability of touch, which is typically a little bit high for a 2021 type delta. With where volatility is, I think you take advantage of the call side. And I'd like a 240 by 250. I like it. You got liquidity there. It looks good. I think you take the aggressive action here.
And Cody, I know you got to bounce here real quick, but what are your thoughts? Just any last ones for this trade setup?
Definitely like the trade setup. I'm actually biased because I'm already in a trade on CRM. And I actually
beat that book, Cody. Come on.
I went straight puts whenever I did it. I got puts down at 200, and they've been paying me quite nicely.
No, I like any put side underneath that starts with the selling of the put at 205. Like I like
the 200 period moving average, and I sold these like 60 days out, so I've had these for some time, and I got a really nice credit on them. And with this turnaround that we're having, like I'm already in the trade, and so I'm biased. So as soon as he brought it up, it's like.
And can I say something very quickly on that? Ty, if you were to say a naked put at 210, I would have been interested because you have that major support. But a bull put, you don't want that to be touched. You don't want that to be even looked upon. You don't want that bull put to be, in the zone of the price action in any capacity. And you certainly don't want to get stopped out above a major support zone right there at 205. So a naked put at 210, yeah, I could see that because you have that major support level at 205. I just don't like that put side on the bull put above that support level. But on the call side, where volatility is, combine that with your technical analysis, I do like that call spread.
Tyler?
Hey, we all part friends, gentlemen. I love this game. Yeah, nice. Well done.
Another advanced technique, in 24 days, where do you estimate the 200-day moving average being? Because I use this in calculations as an advanced technique for support
in 20
bounces.
days?
Yeah.
It's at 204.96 right now. In 20 days, it'll be 206.
Is that the rate of climb?
Yeah, you're not going to be that much higher than it is
within a
right
buck
now.
or two. Yeah, Mark. Yeah.
Yeah, it's not going to help your bull put at all.
No, I'm already in. So Tyler, you either made me $85 or not.
Or you lost him 500.
Which is why I like the bull
well,
call side. I like the reward risk on that side a little bit better.
I do too.
Love the analysis, Tyler. Thank you very much. Obviously, we have a lot of fun here on the show. That was a fun segment right there. Guys, I loved it as well. We'll do it again. Guys, that's it that I've got from my side of it. Why don't we start moving into final thoughts, and let's do this on the broad market here. Tyler, the S&P is climbing intraday, battling back to about break even right now. We're all just kind of up here on this little doji right now. Tyler, you're our guest. Final thoughts from you, sir.
Oh, I think yesterday was the tell. I mean, and I actually wrote an article, Tales of a Technician blog on this. Did yesterday really change anything?
Let's get that link. Come on, if you're going to promote it there, Tyler, let's get the link.
Throw it out there. That in the chat window.
Let's get people to read our amazing content there.
Well, let me pull it up. I brought up just a couple of reasons why I don't think yesterday really changed anything. And this is an important game to play, just the way you analyze the market. When you get a down day, sometimes it's easy to overthink and say, okay, are we in a downtrend now? Should I be bearish? And so if you're not sure of how to think through that, I effectively walked through, 4 or 5 different reasons why yesterday should not have really made you completely abandon a bullish bias. So yeah, there's your link. You guys you can throw it in the Tim, if you want.
I already dropped it for sure.
Yeah. So anyways, ultimately it didn't change the trend. We held support. I also talked about the Santa Claus rally and all that, but anyways, and I ended with my bias still being bullish. I think you put an alert at yesterday's low. We stay above that. Don't overthink it. Trend is higher. Keep playing the game you've been playing.
Mm-hmm, mm-hmm. And by the way, that yesterday's low, that big fat round number, like Matt talked about at 3,600, makes your alert pretty easy in that regard, if that's the way you play it. Marky, final thoughts from you?
Listen, it's a great environment for cash flow trading. I love the extended holiday coming up. I like to think of it as punches to the face you have as a cash flow trader. How many days are the market going to be open the rest of the year? Not a whole lot. Just have a happy holiday. Have a relaxing week. Make a few trades. Make a few bucks on the way out this year.
I agree with those sentiments right there. Make a few trades, make a few bucks, and enjoy the holidays. Maddie, final thoughts from you?
Oh, I was just in the process of calling James greedy. And greed's good, guys. Scared money don't make money. I like that, James. No, final thoughts. No, I think Mark had it. Tim, you came to final thoughts when I was in like train of thought. So no, I have no final thoughts, bro.
Tuesday here, we're on a doji. Give me the S&P, Tyler. Just looking at that thing, the small caps are very strong. Guys, it's a really good time of year for individual trades. It's a wonderful time of year. And I'm not going to break into song here today, Mark, but just for family and spending time with your loved ones and all that kind of stuff. It's the holiday season. Enjoy the markets, run your account every day, stay focused on that. There's no reason why you can't. It's a great time to be trading. But until we get that breakout, I think individual components are the way that I'm going to play it. I love the breakdown on CRM here today. There's always a trade out there. There's always a trade out there. So just keep on moving on. We will be back tomorrow. Tomorrow will be our last show of the week from the halftime report side of it. We will have our regular programming today. Got the coaches show tonight, and then we'll be back tomorrow.